It's always a pleasure to be here, and I think for the first time in person, physically, I am present in a Maharashtra Tax Practitioners Association lecture. So, President of the MTPM, Mr. Shailesh, other office bearers of the association, and my respected elders, friends, dignitaries present here, on the line. The budget is behind us now. The Finance Bill 2022 is expected to be cleared, enacted on any day now. Generally, we have been seeing this in another couple of months. After 1st February, the bill is enacted. For the today's session, I will be deliberating upon two things, not only the budget proposals relating to GST, but also the amendments which have been made effective from 1st January 2022, which were proposed in the last year budget. Both are intricately connected with each other, and it would be an incomplete exercise if we concentrate only on the current year budget's proposals. So we have to look at all these changes which have taken place and which are in the offing in a very comprehensive, holistic manner. It's a full picture which we will need to have. Otherwise, we might be missing some important aspects of all these major changes which are now going to handle the entire GST regime. This entire presentation, no doubt, initial 45-50, this is 178 slides. Don't worry, don't faint on your chair. I'm not going to cover each and every slide. Not required, not possible. Generally, this PPT, please bear with me because there's a possibility that I may not be able to keep the pace with the PPT. Though I will be operating, though it could be slightly easier for me. I'm not very much used to PPT, but it has become now the order of the day. So it has become necessary for me. But this entire presentation, the MTPA will be sharing with everybody, all your joint organizations. Please, you can circulate amongst them. It covers both whatever I am going to cover. So everything is there. Even the earlier, what was the provision, what amendment have been made, the new provision, what is proposed, what is existing today, everything is in this PPT. Friends, on a macro level, the finance minister has only continued on the path which she has already charted out for her in last two budgets particularly. And yes, the thrust is on the infrastructure, thrust is on the capital formation, which is the dire need of the hour. And via that, basically the idea is to generate the employment, generate the income in the hands of the people. So yes, there is a grouse amongst the common man, because nothing is there for me. Purchasing power of the common man, there is nothing to increase the purchasing power of the common man, because there are no direct tax benefits. There is a possibility that the finance minister may be banking upon the actual growth of the economy via infrastructure thrust and via capital formation thrust. It just reminds me of the father of the economy, John Maynard Keynes, in the era of depression. You dig the road and then employ the people. But here, expectedly and hopefully, this will not be simple case of digging out a good road, because then we will be digging out our own grave. This could be probably a very productive path on which we might be now, Indian economy will be. We may have another 2 to 3 years pain, but personally, I have no doubts about the Indian economy's future. I'm extremely bullish about the Indian economy. We will be one of the major economics in coming few years only. There is absolutely no doubt about it. I would love to say on the macro aspect, but obviously it's my personal interest, but I'll skip that. Coming to GST, the economic survey spoke about the GST. There are 2.12, 2.13 are the only para. Two paras are devoted to GST in the economic survey presented a day before the union budget was presented on 1st of February. And so, and if you see, there is a mention about there is a lot of optimism and, the sort of a satisfaction which has been expressed in the economic survey on the GST front. Because only for the January, we had a collection of about 1.41 lakh crore. And then expanding tax base, and a lot of other measures which have been taken to check the fake invoices, menace, and all this have been all commented upon. The coming to, so economic survey is basically painting a very rosy picture of the economy. It is like, the corona is behind us, the impact of corona is behind us, as if it has never, struck our country. It's all rainbow in the sky. There are no dark clouds in the sky. So that is what the economic survey is all about. But in this context, let us see now what the budget carries for the GST and what the last year budget proposals, how they have been now, the changing the very shape of this GST regime in a very, very subtle manner. Before I take up one after one amendment, one important thing to be understood is about from which date the proposals will be taking effect. This is something there has been a lot of confusion amongst the tax professionals and taxpayers, not to speak about the tax officers. The major amendments which have been carried out by the budget, these are the last year amendments. Then these are the amendments which have been made effective. I will just skip this because this is all before you. By the different notifications, last year certain major amendments have been made effective. Some are from 1st June 2021, some from August 21, and some are made effective from January 22. There is a typo error which I will correct. These are the provisions, details of the provisions which have undergone the amendments. Amendments effective from 1st January 2022. These are the amendments which have been made effective. This continues. Rules relating to amendment also. Now, the first important thing is, after service tax regime, unlike excise and customs, the amendments made in the Act, like Finance Act 1994 and now CGST Act 2017, almost hardly barring couple of exceptions in a given case, no amendments are becoming effective immediately on the enactment of the bill. This is something we have to keep it in mind. Unless it is specifically mentioned in the relevant clause of the finance bill, the GST related amendments will not be taking effective on the date of the enactment. If we talk about section 16.2 subclause BA, which is being introduced in the section 16.2 by the current budget, that clause BA on the date of enactment will become the part of the CGST Act, but it will remain as a date letter in the Act. It will come to life when from the date to be notified by the central government. So this is something we have to keep it in mind. All the amendments which have been proposed by the present budget, the latest budget, Finance Bill 2022, except the rate of interest related amendment. Rate of interest, I'm not talking about the substantial provision. I'm 24% to 18%. I'll come to that. Except that reduction in the rate of interest, not a single amendment will be taking effect from the date of enactment of the bill. They will be taking effect from the date to be notified by the central government by notification in the official gazette. It does not even require GST Council recommendation. There's a lot of confusion about because this is the union budget is presented by the finance minister, and it passes through the passage of Lok Sabha and Rajya Sabha, and then it is receives the assent of the Honorable President, and then it becomes a GST Council has no role to play. So therefore, to put the date to make the proposals effective after enactment of the bill, it is the central government under section 1 subsection 2 clause B. If you find every finance act, section 1 says from which date which clause will be effective. And in that you will find that section 1 subsection 2 subsection B says that the following clause is all pertaining to GST except one notification related date that will be effective from the date to be notified. So why I am stressing upon this, there's a lot of panic-like situation created after the budget on the ITC front, as if the sky has fallen overnight. And suddenly tomorrow onwards, people will be denied the ITC practically in every single cases. We professionals are equally culprit for this. We are creating the panic situation for absolutely no justification. None of these amendments which are proposed, which are no doubt serious amendments, none of these proposals will become effective even from the date of enactment. They will become, and I am not expecting them to be effective before December 2022. Because all these amendments will have to be incorporated by all the states and union territories in their respective State VAT Act or UT VAT Act and UT GST Act or State GST Act, and then only the government would notify. Otherwise, it will be a very piquant situation which will arise if the CGST related amendments are made effective and SGST, UTGST remain as it is. I mean, so till December, there is not much. We may have to be prepared. There is an alert which has now been issued, but it is not that overnight, suddenly the whole ITC regime, particularly of the GST, has undergone a massive change. And all these alerts and YouTube and lectures and seminars and webinars, it's painful. It is very sad and disturbing. The things which are being projected as if the budget related amendments have suddenly become effective or will become effective immediately. So this is something which I wanted to put a stage. Now coming to the initial all these slides on the amendments which have been made effective from 1st January 2022. The first major amendment is relating to section 7. As friends, we are all aware about that the taxable event under GST is the supply of goods or services or both. The erstwhile taxable events of manufacture under central excise, provision of taxable service under service tax, and transfer of ownership for a consideration in goods in the VAT Act, they have all now become part of the history. They have all gone back to they are now confined to the history. Under GST, it is the supply of goods or services or both. Supply has been defined in an inclusive manner under section 7. Charging provisions are under section 9. Supply is defined in an inclusive manner in section 7. And it says supply includes so and so, so and so, so and so, and then says carried on by a person for another person for a consideration in the course or furtherance of business. So three important elements before a supply can become taxable: existence of two distinct entities, two distinct persons, two consideration, and third, in the course or furtherance of business. These are the three important elements before a supply can become taxable, subject to whatever inroads which have been created via exceptions, like a deemed provision of Schedule 1 to Section CGST Act, where even sans consideration also, that certain activities have been deemed to be supplied. So there's a legislative prerogative. So business has been separately defined under Section 2 subsection 17. Consideration has been defined under Section 15. So these are the complete, the complete sort of a ecosystem of the complete supply where it becomes taxable. The issue which had plagued the indirect tax regime, particularly VAT and service tax later on, was the leviability of the VAT or service tax on the cooperative societies, members clubs, associations, or such other chambers or bodies where principle of mutuality is applicable or can be applied. Principle of mutuality has already been, it is by and large well settled in the context of the Income Tax Act. It was later on extended to VAT when the VAT authority started levying or started some endeavor to levy the VAT on suppose the goods in the clubs, majority where the goods are being sold on behalf of the club to the members for whatever as a part of the membership's benefit. There have been umpteen number of judgments of the income tax which have been followed in the VAT. Then came in 1994 service tax, and the first attempt was made by the legislature to bring such entities within the service tax net was in 2005 when an explanation was introduced to section 65(105) which is defined. I'm talking about the positive list based levy. It failed. Then again there was another attempt. Then came the, I'm not going into too deep into the history, very fascinating history, but then came the negative list based from in 2012, section 65B subsection 44. It carried an explanation paving way for the, or that is was supposed by everybody. It paves the way for the levy of service tax on suppose the service is provided by a cooperative society to its member. I might be using the term cooperative society only for the sake of convenience. So every time I will not say society, club, association, etc., etc. When I say society, it means all the entities where doctrine of mutuality has been made applicable or can be applied. So society is representative of this type of entities for our discussion today. So however the challenge remained whether VAT can be levied on such entities, whether service tax can be levied on such entities. Finally, in Calcutta Club, this matter went to Supreme Court, and Honorable Supreme Court larger bench in October 2019, one of the most outstanding historic judgment, ruled in short that doctrine of mutuality applies to the such entities also in the context of VAT and service tax. They discussed about the unincorporated body and incorporated body also. It's a subject by itself which can be gone into for at least 2 hours. So I'm not going into that. I take it for granted. All of you must be aware of it. It's a fascinating judgment and very much misunderstood judgment in a way. Very few people have been able to derive the ratio of that in a correct manner, if I can say that. But that is now the story starts. GST came in 2017, and the issue was whether such entities, doctrine of mutuality can be applied under GST regime to such entities or not. There were 2 classes of the opinions, clearly amongst the even tax professionals also and experts also, that GST has changed everything. Like, it's like I always felt amused that how we all get under an aura of certain major amendments. When negative list came, everybody, one single comment was, now everything is under GST, service tax. Because now positive list based levy has gone. So everything is under service tax. Irrespective of, nobody bothered about the statutory provisions and the preconditions required to be fulfilled even to tax an activity under service tax. Any income appearing on the credit side of the balance sheet, there must be underlying service, therefore it is taxable. That is a presumption on which everybody have been actually acting upon. Same thing happened under GST. Majority of the people have taken it for granted under GST, everything is taxable. If not as goods, then it is service. Because service definition starts with goods definition, service definition, services means anything other than goods. Which led to that absolutely horrendous inclusion of the supply of land and building under Chapter Schedule 3, which never was required also. Even without that inclusion, immovable property could not have been subjected to GST at all. But we played straight into the hands of the government. We created hue and cry. Supply means anything other than goods. Therefore, immovable property will become service. Therefore, why are you actually taxing it? So, okay, government wanted this. Okay, fine. You are worried. I will put it under Schedule 3. And with that, all attendant consequences have started in the context of Section 617, subsection 3, then proportionate supply and hold. Anyway, again, there's a different story. So the point is, nobody wanted to take a risk that societies also come under the service GST. There was a very minority class of people who said, okay, no, even under GST, doctrine of neutrality continues to apply. And remember, this was much before Supreme Court delivered the judgment of Calcutta. And I'm not boasting. With due humility, I will say, I have always held the view that service tax was not leviable on the societies, and GST was also not leviable on the societies. Always I've been taking this view, always. And I had a benefit of a lot of interaction with seniors like, there are many seniors, including my close friend, Mr. V. Raghunama and Mr. Veti sir. And I had a benefit of Datar sir's view also, and a lot of other interactions. So always I have taken this view, that, and it always strengthened my view that this is still not something where I would like to give up. There are certain issues always in the law, and all of you are very senior, you would know that there are certain issues where one should be prepared or one should like to lose in the Supreme Court, rather than to give up in the beginning itself. I'm not suggesting that we should drag our client to the litigation, but a herd mentality which is right now reflected in among the tax professional under GST is extremely disturbing. We are just getting swayed by what others are thinking and what WhatsApp University is teaching. Income tax law has developed because somewhere in some corner of the country, some chartered accountant was willing to take a position. He might not have argued the case in High Court or Supreme Court, but he took some position on a particular transaction, which ultimately became a law via court ruling. This is missing under GST. Very sadly, this is missing under GST. We have suddenly become, as tax professional, we have become submissive. Why to get into travel? Credit मिलता है ना तो credit ले लो, tax भर दो, tax वसूल कर सकते हो ना तो tax भर दो, right? और last में the most backward authority called advance authority तो है ही. That is the shortest cut. Very, very scary and sordid picture presenting this particular scenario. Anyway, so, but when Calcutta Club came, GST Council became worried, and GST Council took a note of Calcutta Club's repercussions on the leviability of GST on the societies. And in their meeting, they ultimately, 39th meeting, the minutes very clearly say that this judgment and the ratio of the principal laid down therein may create roadblocks for the levy of GST on the societies. Of all the people, council took the note where others had given up. And amendments were considered necessary. The amendments were proposed in the minute, the draft amendment. Very interestingly, the draft amendment, which is part of the minutes of 39th meeting, and the amendments which have ultimately been carried out to Section 7, both are different. Both are different. And this is something interesting, and one would like to get into this, what could be the repercussions of this. What has been approved by the council and what has finally come via finance bill. So, and obviously the idea is to really get over with the Calcutta Club, to nullify the Calcutta Club. That is the basic idea. There is, absolutely transparent, open objective. We want to nullify. At least on the other side, this amendment, has gladdened the hearts of the people like me, who have taken the position that GST is not applicable on the society. Because the retrospective amendment vindicates the position that GST was not leviable on the society. Otherwise, retrospective amendment was not required. So, and I will not go into this explanation. I'm sure by now all of you must have read that. One of the most poorly, badly, and it is an understatement to call them, most hopelessly, badly drafted explanation one can ever compose. Forget about the grammatical part of it. Quite a few provisions, we have no respect for grammar in the. There's another issue, which is very serious. But in this explanation is one of those pieces. An idea is to really they have created that it should be treated as from one. So distinct person concept they are introducing in the supply definition. Now it's another thing whether this should have been put in a fitness of the thing in the person definition, or whether it should have been put, should be put under the supply definition. So that placement, how far it is justifiable is another issue. Now, this amendment, this explanation has been given effect from the retrospectively. It has become effective from 1st January 22 and it has been made effective from 1st July 2017. What are the issues which would arise because of this? One, whether these amendments in the first place are sufficient to bring the societies, resident welfare association, clubs, and even MTPA like association also within the scope of the GST. I'm sure you have also accepted the GST from the day one without Kolkata Club and without this amendment. And nothing, I can't find fault with it because I have yet to come across a single association or chamber who have not accepted service tax liability and who have not accepted the GST liability. For a number of reasons, majority of them are practical. But at least you were never liable for service tax and association was never liable for GST. Now we come to whether after this, whether in my personal opinion, these amendments are still not sufficient to bring societies, etc. within the scope of the levy. These are half-hearted amendments. It does not carry the department's case anymore, any further. The concept of distinct person, apart from that, the business definition and consideration definition as explained in section 15, they are not taken care of so as to complete the picture and bring such entities within the levy. Only two amendments have been made. Explanation has been inserted under section 7 and schedule 2, para 7 has been omitted. Supply of goods by the unincorporated bodies. Are these amendments sufficient to bring the societies under the levy of GST? In my personal opinion, no. It's an extremely dispute-prone issue, but it's worth debating and disputing the issue. In fact, my view and my interaction with the Delhi was always that to bring these type of entities within the levy, you will have to make amendments at 4 places. Unless these 4 places amendments are carried out in a pragmatic manner, you will always have a challenge in levying GST on such entities. Unfortunately, the comprehensively the work has not been done. This is what my feeling is. In a way, doctrine of mutuality is applicable to IT, income tax always, and world over doctrine of mutuality has been made applicable to in the direct tax, not in the VAT or GST as I understand. So principally, it may not be wrong to levy, but when you want to levy the GST on such entities, which otherwise might have a protection of the doctrine of mutuality, please do the job legally. Go properly in that manner. Nothing wrong. If you want to levy, please levy. But you should have a proper legal framework for doing that. You can't have an FSR manner. You can't go on levying the GST by tweaking the law in one manner or another, here and there. So I think these amendments, even after that, leviability of GST on such entities still remains a disputed issue, will remain a disputed issue. The second part of this is, it has been made effective retrospectively. And it's a very, very unfortunate. Why it has been made retrospective? And again, during my interaction, it was always, and believe, Please understand, the council did not recommend it retrospectively. So it would be probably interesting to know that how many such entities would have not taken the GST registration in the country. So what do you want to gain out of this? Or was there an apprehension that if you do not, it is not the question of recovering additional mullah from those entities who are still not registered, but to protect against the grant of refund, because if it is made prospectively, it means this levy was never there. So if the levy is not there, then obviously one would be inclined to ask for the refund. Government ought to have realized then who would go for the refund? Which society, which association will go for the refund? Because everybody would have collected from the members. Doctrine of unjust enrichment will always be there. Under that circumstances, how many will take the pains of seeking the refund, fighting till end, and saying that okay, we will refund it to the members, and thereby get over with the doctrine of the unjust enrichment? How many would be there? So why to make this effective retrospectively? This retrospective amendment, obviously, the outcome will be that the people, those who have not taken the registration and not paid the GST for any reason, prima facie, they will now be hit by because of this, and the demand will start. Retrospective validity is definitely under challenge. Going by the entire checkered history of this entire controversy, starting from VAT, service tax, and then GST, the retrospective validity given to this legislation, particular amendment, is definitely can be a subject matter of serious challenge. It is not something which has come out of blue sky for the government, which they never intended, and you are now putting the things right by taking the retrospective route. Your law was hopelessly drafted. You knew that this GST can have a different challenge. You are already fighting VAT and service tax levy, non-levy or challenge to VAT and levy on the societies. So at least in GST, one could have been more vigilant, more alert, that not to take any chance. But you took your chance in Calcutta Club, saying that if the Supreme Court comes to our rescue, then everything will fall into place. Because now Supreme Court ruled against you, therefore you are now coming out with the retrospective amendment. It's not something where the provision was worded in a particular manner and there was an interpretation which forced the government to go for the retrospective amendment. You had enough opportunities and time to take care of this. And there are many other aspects. Retrospective amendment, there are a number of important judgments by the Supreme Court in recent years also. And I'm sure that the principle will apply. The other part is about can interest and penalty be levied? If the GST is collected for the past period, whether interest and penalty be levied, penalty is ruled out. When a levy is introduced by a retrospective amendment, there cannot be a penalty. There are umpteen number of judgments. In Star India case, Supreme Court has laid down even such circumstances, even interest will not be paid. Interest will also not be payable for the past recovery if it is made. And another important aspect, can the society ask for the ITC benefit for the past period? A society which has not registered itself and not paid the tax, can it say that, okay, you are now recovering tax from me from 1st July 2017, then okay, I have a tax paid purchases, inward purchases, supplies, give me the ITC benefit. This law had remained well settled in the earlier erstwhile excise and service tax era, where for any reason, excise duty or service tax has not been paid by the taxpayer for any reason, either by availing exemption which is held to be not admissible, or because of the classification dispute, or even by resorting to the clandestine activity. Even in evasion cases, the judgments are, there is a cat and out decision which says that benefit of IT, Senvet credit cannot be denied. There are a number of judgments. Hundreds and hundreds of judgments are there, and it's a good law. Whether the ratio of the principle of those judgments can be applied under GST, not only in this context, even in the normal cases, Okay, where the tax is not paid by the taxpayer for any reason, either under the bona fide mistaken belief or because of maybe malified intention also. And if the demand is raised for the past period, can he say that, okay, I have a valid inward per supplies, so you give me the ITC? In my opinion, yes. The challenge, a very, very finer line of difference between the erstwhile regime and the current GST regime in this context lies in the provisions of Section 16 vis-a-vis erstwhile Rule 3 of Senate Credit Rules. Senate Credit Rules 2004 Rule 3, which was the fountainhead of the entire Senate Credit Rules. That rule started with a manufacturer of final products or provider of the output service shall be entitled to take the Senate Credit. This is how the rule started, sub-rule 1. It never used the word registered person. Section 16 subsection 1 starts with a registered person shall be entitled to take the input tax credit on the inward supply of the goods or services or both used or intended to be used in the course or furtherance of business. So it starts with registered person. Can the department say that you are never registered and therefore ITC cannot be given to you? In my personal opinion, this argument may not be valid from the department, but it will have to be tested. Particularly in these type of cases, where the levy itself was not there, so I did not take the registration. Now you are forcing me to take the registration through retrospective amendment, then you give me the ITC benefit. This is one area which is going to be an extremely contentious area in the coming days. Not only in this, in case of any other taxpayer, where the demand is raised for the past period, and if the taxpayer claims the ITC benefit, this is a proposition which will come under intense scrutiny of the law. But there is a doctrine of which neutrality, one of the outstanding feature, or maybe the main feature of the VAT or GST is the doctrine, the neutrality. Whether the doctrine of neutrality or principle of neutrality, how far and in what manner can be applied in this type of argument. But nothing should prevent the entity who is being settled with the demand for the past period to claim the ITC. They should claim the ITC benefit. And then whether time limit of section 16.4 will apply. Again, my view is this, section 16.4 time limit will also not apply. Section 16.4 time limit, in any case, I have always taken the view, it was in our view that section 16.4 time limit was even not applied, was not applicable even in the normal cases. Normal cases also. And that challenge is already there before the courts. The peak is slightly cleared because of the retrospective amendment to Rule 61 and Rule 59, 3B, which was introduced. It was been given now the holistic status. Now, after that, no doubt on this particular front, the challenges become a little bit more serious. But still, from the day one, it has been my view that 16.4 time limit is not operable at all. So 17-18 credit can also be taken now in 2022. So that is one. But in these particular cases, here it is a sort of a demand which has been raised for the past period. It is in that context that I am seeking the benefit of ITC. The question of my not complying with other requirement, somebody cannot say that you are not even filed 3B. Where is the question of my filing the 3B when I was not registered? It is the ratio of the principle of Supreme Court in Formica division case which will come to the rescue. Then, so yes, if department were to deny the benefit ITC also on the ground that now time limit this time under section 16.4 has gone, that can be a the subject matter of the challenge also. And we now come to the major amendments of section 16. I'll take this into in a very comprehensive manner. Not only the January 22, even the proposed amendment. Will not take it in a piecemeal manner. Section 16 is again the one comprehensive machinery for the fundamental machinery for the availment of ITC. And section 17 again further support is carries the other provisions, which are also the machinery, the main provision for the availment of the ITC or blocked ITC, etc. in certain circumstances, proportionate ITC. Section 16(1), as I just now said, it is laying down that every registered person shall be entitled for the benefit of ITC, subject to such conditions and safeguards as may be prescribed and restrictions as may be prescribed. Section 16(2), subsection 2 of Section 16, as originally enacted from 1st July 2017, it was having 4 conditions. Which are those 4 conditions? 1, the taxpayer should have received the tax invoice. Taxpayer should have received these goods or services as reflected in the tax invoice. 3, supplier should have paid the tax by cash or by utilization of the admissible ITC. And 4, the buyer, that is recipient taxpayer, should have filed the return under Section 39. These were the 4 conditions, preconditions, which were required to be satisfied initially for claiming the ITC, and then you apply the 17(5) block credit, whether it is covered or not, and other such conditions. The problem started. There are 2-fold amendments which have been made from 1st January 2022. The one is, one additional condition has been introduced in the form of clause AA. The details of the invoice or debit note referred to in clause A has been furnished by the supplier in the statement of outward supplies, and such details have been communicated to the recipient of such invoice or debit note in the manner as specified under Section 37. This is 5th condition, which has been now introduced. And simultaneously, Rule 36(4), which was introduced by notification number 49 by 2019, center tax on 9th October 2019, providing for the restricted credit in case suppliers' invoices are not uploaded. Initially, it was 20% of the reconciled credit, then it became 10%, and before budget, it was 5%. Now, that was an additional condition. That sub-rule 4 has also been now completely substituted and made effective from 1st January. And it says now, again, it does not now speak about the percentage or anything. It seeks to convey that suppliers should have uploaded the details of his supplies via GSTR1, and those details should have been communicated to the recipient taxpayer via 2B. Initially, the concentration was on 2A. Now it is 2B. Now, if you see, 36(4) is a sort of an enabling provision for Section 16(2)AA. It is basically a supportive or enabling provision for Section 16(2)AA.
Continuous.
I'll come to the issues regarding the legal issues arising out of all. The other amendment, this were the amendment which have been made effective from January 22. Now, what has been proposed in this budget, yet another amendment which has been now proposed in the form of insertion of clause BA in Section 16(2). And that clause says, the details of input tax credit in respect of the said supply communicated to such registered person under Section 38 has not been restricted. So now this is the 6th condition. 4 conditions are already there. 5th is regarding suppliers' invoices having already been uploaded and details thereof being communicated to the recipient. That has been made effective from 1st January. And this is the 6th condition, that there is no restriction on the credit which would be admissible to the taxpayer. So the flow of the credit from the supplier to the recipient is not restricted in any manner in terms of Section 38. Section 38 has also been completely revamped. It has been substituted, and that substituted section says, on the highlighted portion, that the powers have been taken over by the central government in the substituted Section 38, that on the recommendation of the council through notification, central government can restrict the credit to be passed on to the recipient under any of these circumstances. Supplies by any new registrants for a particular prescribed period, Supplier has defaulted in payment of tax and such default has continued for a particular period. The output tax payable by the supplier registered taxpayer for the prescribed period exceeds the output tax paid by him during the said period by the prescribed limit. Payable is exceeding, so he has paid less. Where the supplier has availed the ITC in excess of the ITC otherwise admissible to him by a prescribed limit, where the supplier has defaulted in discharging the tax liability as per subsection 12 of section 49, subject to such condition and restriction, and in cases of such other cases as may be prescribed. Now, what is section 49.2? Others are, we can understand. 49.12. Sure. I'm sorry. (49.12) says, notwithstanding anything contained, it starts with the non-obstante clause. The government may, on the recommendation of the council, subject to such conditions and restrictions, specify such maximum proportion of output tax liability under the act which may be discharged through the credit by a registered person as may be prescribed. Basically, how much credit can you use? And if that restriction is in place, and if there is a breach of this restriction by the supplier, and he has utilized more ITC than what otherwise he can utilize, then also there can be a restriction on the credit to be given to the supplier. Now, so what is now emerging? Now, these are all obviously matter of concerns for everybody. That what is in the offing? Is there a very torturous way ahead? Now, first of all, why all these amendments? Why? And what the government is actually, banking upon? Why they are hell-bent upon creating the ITC roadblocks at every single stage? There's a lot of serious deliberations on which is required. GST by nature is a fraud-prone tax. By nature, world over. It's not that we have a monopoly in it. We are much more ingenious and intelligent than other maybe, as far as commitment of the fraud is concerned. But the problems are being faced by everybody across the world. And billions of dollars and billions of pounds are being lost by Australia, UK, European Union. The best GST system is considered to be prevalent in New Zealand and Singapore. So, and one of the internationally acclaimed VAT experts, Sibren Nosin, Netherlands-based expert, one of my favorite authors, he has divided, almost all of you must have heard the name and must have seen number of times that epic movie of Clint Eastwood, The Good, the Bad and the Ugly. You can never get tired of watching this movie. Mr. Nosen has divided the VAT world into the good, the bad and the ugly. New Zealand and Singapore are the good part of this. The European Union, Australia, Canada are the bad part of it. And South Africa and Brazil are the ugly part of it. Whether India will provide some consolation to South Africa and Brazil or not, only time will tell. But so therefore, there are three methods by which the GST can be or VAT can be introduced, and that is capital addition method, subtraction method, and the invoice credit method. Every single country, about 200 odd countries who have now shifted to VAT, they have gone for the invoice credit method. Therefore, the invoice has become sacrosanct document. What I pay as by way of a tax is what I am reflecting in my invoice. I decide transaction value, I decide classification, I decide admissibility of the exemption notification, concessional rate, etc. I quantify the tax and I put it in the invoice. It is that tax which I am paying or showing as a payable will again be available to my recipient buyer by way of a credit. And because invoice credit method, the fundamental objective of GST or VAT is to avoid the cascading effect of tax on tax. That is the fundamental objective. And this is being achieved or sought to be achieved by providing the credit of the tax paid on the inward supplies to a taxpayer to be utilized for the payment of his output tax liability. This is simple. We are all aware of that when VAT was introduced. Nothing, I mean, GST is on the same line, obviously. So, and therefore a comprehensive, uninterrupted, seamless credit is the heart, is the soul of the GST. The moment you start creating roadblocks and the moment you start putting restrictions, at times artificial restrictions, you are breaking the chain. The moment you start providing the exemptions to the number of activities, goods or services, you are breaking the chain. Exemptions are not good for the health of the GST regime. And we are always feeling sick if we are not given the exemption. We consider exemption as our birthright. And when Saturday, incidentally, when I was attending Tax India online, our Revenue Secretary Tarun Bajaj, actually, I mean, he pondered at length. He gave some food for thought. Okay, why are we still, why nobody is coming forward? Okay, you remove these deductions, you remove these exemptions. There is a German expert, I can't pronounce his name. He has said that operating through the invoice credit method, VAT is a paradox. In the sense that those who consider themselves as exempted are actually taxed, and those who consider themselves as taxed are actually being exempted. If you have understood this, you have understood VAT. Because when my activity is being exempted, I am feeling the burden of the taxes which have already gone at the initial stages. It is as simple as that. But we just simply can't live without exemptions. And we dil mange more as far as the exemption is concerned. And the best tax reform, as somebody has said, is the real tax reform is one where my activity is exempted and my neighbor's activity is taxed. There cannot be a better tax reform than this. This is all which we crave for. Anyway, so this is the seamless credit. If you see the statement of objects and reasons to the 101st Constitutional Amendment Bill, which laid down the legal framework for the introduction of the GST laws, nowhere the word seamless is used. It only says to avoid the cascading effect, to mitigate the cascading effect of tax by providing the credit. The seamless word came to be introduced only as a statement of objects and reasons in the CGST Act, and more particularly in the December 2016 CBIC FAQ on GST, which has been introduced. In the first two questions, they have very openly, transparently proclaimed that the idea is to provide seamless credit to everybody. Whether it is seamless credit or it is seemingly less credit, we are now grappling with that. But why all this amendment? Where they are leading to? So as I said, that the GST or VAT is a fraud-prone tax operating through the invoice credit method. These frauds are tabulated. I mean, in one of the papers in which I had submitted, there are 14 types of, almost 13 to 14 types of fraud. Right now, please don't ask me which are there, but there are missing dealers, invoice mills, what we call is the fabricated invoices. In the European way, they call it invoice mills, like a mill producing the product. These are all invoice mills, carousel fraud. These are all frauds associated typically with GST. And when we talk about the invoice being the sole document on the basis of which I am being availed the credit, we know in this country, invoice is the largest selling commodity in this country. It is the largest selling commodity. If government can find out some ways of taxing the invoice selling, probably they will not need any other thing to be taxed. And this has happened in the VAT regime. It was not that it was not there in VAT in excise, but in VAT, fake invoices, bogus invoices came to light, which otherwise in excise, I entered the field in 1986. I have seen 10-ton material being delivered on a two-wheeler bike and three-wheeler rickshaw in 1986 also. 10-ton, 12-ton material being carried by bike, Bajaj scooter. you know. So those, and there are different type of fraud. Pure invoice without supply of goods, then invoice coming from one place, goods coming from another place, getting married in the factory of the manufacturer. All these things have been happening. These are, and obviously in GST, things could not be different. However, it ultimately became Mahalakshmi Cotton, Bombay High Court judgment. Section 54, subsection 5, validity was challenged, and it was actually upheld by the Honorable Bombay High Court. A judgment was written by a lucid judgment written by Honorable Justice Chandrachud. But that was the case, one of the most unique cases I have come across, where state government furnished the affidavit before the High Court, giving the assurances and the SOP sort of a thing that what they would do if the suppliers is found, having committed a fraud or have disappeared from the scene before moving or at the time of moving against the buyer, denying him the benefit of settlement. And in the last para of the judgment, Honorable Bench has said that we expect the state government to abide by their assurances. What is now emerging is the substance or the soul of the 54.5 has been picked up. Assurances have been forgotten. Because almost all the states had a similar type of provision. And what is really interesting is that there was no such provision ever introduced in the excise or service tax regime under Sandwich credit rule or mode. It was not that the central government was not oblivious to the frauds taking place. We are still fighting such cases. But they never thought it fit to introduce such type of restriction that if the supplier does not pay, you don't take the credit. That is clause C of section 16(2), original. Supplier does not pay, buyer does not get the credit. And it was, Central was never ready to bring such provision under GST. It was at the insistence of the states that they had to force introduce this provision. Because states were not willing to come on the board unless this provision is made. We have number of judgments. I'll come to the validity part of later. So basically, it is to control the menace of the fake invoices or the bogus credit. These provisions have been made. Initially, it started with 2, 3 never saw the light of the day. It has now been completely relegated to the dustbin. They have been now buried deep in the grave, finally by this budget. We made a lot of UN cry about ye ho jayega, wo ho jayega, system will match and everything. It could never take off. If that UN cry would not have been created, probably the situation would not have been so serious. The tiger is coming, ye ho jayega, wo ho jayega. And afterwards it becomes free for everybody. Because nothing came. And it's so free for all. And unfortunately today GST has become free for all. It has invoice printing has become a cottage industry now. Completely, it's a sort of a cottage industry. And while we are talking how many crores of rupees of invoices might be getting generated in which corner and who might be getting the benefit is anybody's guess. The point is here, there are two parts of this, the justifiability of such restrictions and two, the validity of such restrictions. Here, when we come to the justifiability part, I recall the words of one and only one Nani Palkiwala. It's a wonderful passage which I had quoted when the 4-part series which I wrote in Tax India Online in 2016 on the model GST law. Model GST law, is it a horror show? That was my title. And the 4-part series which I wrote, you can easily go through those. I pointed out in my own with my limited understanding, I pointed out the danger areas and the problematic areas, dispute-prone areas of the model GST law in those 4 parts. And unfortunately, quite a few of my apprehensions have come true. So in the invoice mismatching part, where I had dealt with it extensively, I have quoted Nani on this. So the Nani says it is a pathetical obsession of the lawmakers to make the laws only keeping certain evaders in mind. This may not be the exact words, but this is what he says. To make the laws keeping certain evidence in mind and to bring them within the net. Regardless of the miseries it would inflict on the large number of the honest and compliant taxpayers. And then Nani sums up in his own way, which only he can do. It's a long passage. Finally, he says, a departmental store which is obsessed, which is preoccupied only with shoplifting is a sure candidate for the stagnation. दुकानदार का ध्यान सिर्फ सीसीटीवी कैमरा में है और मेरी दुकान से शॉपलिफ्टिंग नहीं हो रहा है ना, उसी पर अगर वो गल्ले पे बैठ के वही देख रहा है, he is a sure candidate for the stagnation. How fondly we can recall these words of them. Today, all these provisions are keeping evaders in mind. Every hour, figures are being released, fake invoice, यहाँ पे ये arrest हो गए, वो हो गए. Why? What? I'm not going into the, all these claims also. Yes, frauds are happening. There is no doubt about that. But after unearthing the frauds, what are you doing? In how many cases? Even we are now 5 years. How many cases so-called notices have been issued? How many? I mean, you just arrest or you force them to make the recovery. Whether that recovery is valid, he might have committed the fraud. Whether recovery during investigation without so-called notice is just valid. Can it be treated as a revenue? Is it a part of 1.41 lakh crore? Is it a part of 1.13 crore, 13 lakh crore, which today in the afternoon the figures are released? Is it not a deposit? Unless the person has closed the case under 73(9) or 74(9), will it not lie as a deposit? Recovery during investigation. The question here is that whether for the fraud of the suppliers or fault of the suppliers, buyer can be denied the credit. This is in the context of section 16(2)(c). Can it be denied? And this is not only our problem. As I said in the earlier part, it is a problem of everybody, every country. The law of European Union on this point is very clear. There are a number of judgments, joint cases of Optigen, joint cases of recorder, recycling. These are in all these cases, European Court of Justice has said that unless and until the buyer's complicity or involvement in the fraud being committed by the supplier is established, buyer cannot be denied the benefit of VAT deduction, what we call the ITC, cannot be denied the benefit of VAT deduction for the fault or fraud of the supplier. This view have been, without citing this judgment, this view has been echoed by our number of high courts. In number of cases, Perumal Balchand case, Arise India case, Delhi High Court, very recently, to some extent, LCW, Calcutta High Court, in 3 weeks before, in the month of February, Rajasthan High Court in Asha Oil Traders, where they dismissed the review petition filed by the revenue, referring to Arise India and other cases of the High Court only on this very point in the context of VAT, that you can't deny the benefit of the set-off to the buyer because the supplier has not paid the tax. And in my personal opinion, this is the good law. Law does not compel somebody to do the impossible, particularly when you do not even have a mechanism to lay down. And here the assurances have been forgotten. Bethel Enterprises case, YS Bethel Enterprises, Madras High Court case, again, overhyped and grossly misunderstood judgment. Grossly. It never said that these proceedings cannot lie under section 16(2)(c). But in that case, the party had asked for the cross-examination of the vanished suppliers. And against supplier who were registered person, no action had been taken. The observations of the High Court in Bethel case should be very carefully studied. It does not lay down the law. Bharati entered Supreme Court, the paragraph on 2A is an obiter dictum. The application of that in such type of cases will require very careful examination. But otherwise, we have a big number of judgments. Gujarat High Court, Modi Industries Limited. There are a number of judgments on this. So, one is justifiability, impossibility doctrine. The next is validity. Validity, number of provisions. 36(4), I have always taken the position, 36(4) is an orphan child. when it was introduced on 9th October 2019. It had no parents. उसके कोई माँ बाप है नहीं. It was a completely orphan child. Now you have substituted 36(4), which is proposed to be from 1st January, and you have found the parents in the form of clause AA. तो अभी एक फैमिली तैयार हुई है, कंप्लीट फैमिली, पेरेंट्स भी है, बच्चा भी. Otherwise, original 36(4) was an orphan child. It was an hopelessly illegal piece of legislation in my opinion. Incidentally, I have never allowed my client to follow 36(4). My concern was very clear. Either you take full credit or you don't take the credit. Because the impossibility of adhering to 36(4) even at the ground level was sufficient for me to just move away from it. The impracticality of even validity is challenged in number of high courts, it is still pending. Once the 36(4) is held to be illegal, now this substituted 36(4), it again vindicates the stand that original 36(4) was illegal. It was without authority of. So any demand, then we come to the 2A. Another misconception among the taxpayers and tax professionals probably which I come across is that 2A was basically became effective from 9th October 2019 when 36(4) came into force. It is wrong understanding. 2A was always the part of 2017, right from the day one. Please see unamended Rule 61 and 59, 60, 61. It was always the part of the law. 2A was always there. Only nobody bothered about 2A. Nobody had a look at 2A because it was not considered necessary. It was only when 36(4) was introduced and the restriction on availing the credit in case the supplier's invoices are not reconciled, that people started, because there was no other way you can see whether the invoices are all invoices are uploaded by the suppliers or not. How can you see that? You can only see it to 2A. It does not mean that 2A was introduced or became effective from the 9th October 2019. Otherwise, on board basis, department is now raising the demand for 17-18 and 18-19 on the basis of 2A vis-a-vis 3B. Because 2A is already available to them. And it was always available. I am not talking about the validity of 2A. A demand purely based on 2A versus 3B is a hopelessly illegal demand. It has no sanctity in law. If the invoice is not visible on 2A, a logical inference probably can be that the supplier has not paid the tax. He has not uploaded the invoice, so he has not paid the tax. That is a logical inference. If that is a logical inference, then what will happen? Which provision will come into play? Section 16(2)(c) will come into play. That supplier has not paid the tax, which will render my entitlement to ITC inadmissible, correct? If that is so it becomes a case of wrong ITC. Well, how can the wrong ITC be recovered from me? Only by show cause notice under Section 73. Section 73 is a complete comprehensive machinery provision, self-sustainable complete provision, which says in case of any tax not paid or short paid or refund erroneously granted or ITC wrongly availed or utilized, there should be a show cause notice. So my 2A is the trigger point. There could be some problem with some invoices of the suppliers where he might not have paid the tax, which will bring into picture substantive provision of Section 16(2)(c), whereby the credit become inadmissible, can be claimed to be inadmissible, which will in turn bring Section 73. Mere audit objection or letter between 2A or ASMT 10, 2A versus 3B begs absolutely no authority. It is the right of the taxpayer to ask for the show cause notice. And it is the right of the taxpayer to ask for the details of the transactions which are not visible in 2A. One is not required to assume the department's case. Onus lies on the department. These are the invoices of the suppliers during this particular period were not visible on. And 2A is a dynamic form, unlike 2B, which is static. So it is onus lies on them to provide the details of the transactions and the relevant suppliers invoices which were not visible uploaded on 2A during the relevant period so as to enable the taxpayer to take the further defensive action. We need not get into and spend our time to find out which transactions were not available. Be it SMT 10, be it 73 so-called notice, or be it audit objection. The first thing to do is to seek the details from them. At what point of time? Because it's a dynamic form. On 1st March 2020 at 5:30 in the evening, I saw your 2A, these invoices were not available. Give me the details. I will take up the matter with the supplier. What is the facts? You can't simply ask me to reverse the credit on the basis of 2A versus 3B. So 36 for validity. Then comes to the BA. Now BA has been included. Double AA says the supplier should have uploaded and details should have been communicated. So now it is 2B. Now 2A is relegated to the history. It is now 2B. Now the question is whether 2B or not 2B. The existential question, 2B or not 2B. Which we have been all facing. I mean, if we are careful enough to think about it also. So 2B or not 2B, but not so, I am not mistaken. So the question here is that whether I'm not even talking about the 2BA, double A drafting part of it, grammatical part of it. In the comprehensively, when you start reading from the beginning, section 16.2, really this close construction of the sentence does not make any sense. So double A talks about the problem is indirectly is it not putting the onus on me, an impossible onus? My supplier has not uploaded, therefore I cannot take the credit. And what about GST and portal, the almighty God of the GST system, which is above everybody, right? Which is above parliament, which is above council, which is above everybody. Portal. If portal related glitches results into non-communication of the details of the supplier's details to me, there is no safeguard or protection. I have to just look at 2B, credit not available. The question is, if the credit admissible, and I'm talking about genuine valid cases, I'm not talking about the fraud cases. If the credit admissible to me as per the supplier's invoices, as per my books of accounts, in case of genuine purchases I have received, is not fully reflected in 2B, whether this provision can be a valid provision to deny me the credit. This is the worth fighting provision. Validity is definitely can be a subject matter of challenge. What is also simultaneously to be done is, in all such cases, it's not that we should take lightly or ignore 2A or 2B. I'm not saying that. What has to be done, and which, I mean, I have always got it implemented. If the supplier's invoices are not visible on the system, there should be a sort of a practice of default mail going to the supplier. Your invoices are not visible to me, which is preventing me from taking the ITC. Kindly look into it suitably, advisors. What is the status? This should become a practice, followed by a reminder also. You have to create your bona fide for the legal fight. As a professional, when we talk about, we can take the client, you take up the matter with supplier. Then we will see what is to be done, correct? Now the second part is, if the client has entered into the adjustment, client will say, okay, Mr. Patwardhan, why are we bothering about this? ठीक है, मैं credit reverse कर लेता हूँ, वरना मैं credit नहीं लूँगा. So we have to keep quiet. We have to understand what client has done, because he knows better than us. We will never become there unless, I mean, there can be some exceptional brains who can make out कि यहाँ पे adjustment. Otherwise, as a professional, how can we make out whether the goods have actually come under the particular vehicle or not, and whether that vehicle is not a two-wheeler or the tent or not? Truck with बताया है, we will never come to know. So client अगर बोले कि ठीक है, supplier invoice नहीं है ना सर, जाने दीजिए, मैं credit reverse कर और नहीं लेता हूँ, तो fine, we have to keep quiet. But otherwise, we have to create the legal basis for fighting by this. And whether to follow then 2B or not, the validity is seriously under challenge. It can be. The next which has been made is about a credit is not restricted under those 6 circumstances. This is all proposed now. AA has come into force. BA is proposed. The substituted, proposed to be substituted section 38, I listed 6 cases where the central government has got actually acquired the powers to restrict the credit. This will not become the law. This will not become the law on enactment of the bill. It will become effective only from the date to be notified by the central government. Please keep it in mind. And ये restriction पे जैसे कल से लागू हो गया, this is how the people are discussing about it. And what are the restrictions? New registrants, they can restrict it for the prescribed period. And so if there is a new register, a person has applied for the registration for the first time, then there can be a restriction whereby on the invoice, valid invoices on him covered by the actual supplies, still the credit will not be admissible to the recipient. What is prescribed period? How? We will, this is all supposed to be prescribed. So after this becomes the law, becomes effective, say in December or wherever, not before Diwali as I see this. We have 5 states election going on. So it will be some time before this becomes. Then we have to wait for the notification. And not to speak about the validity. Whether the validity, whether the validity of this type of restriction will stand the scrutiny of law or not, we will have to see that. Whether 16(1), the fountainhead of the, again, the ITC mechanism, which says that subject to such safeguard or restrictions or condition as may be, right? Whether they are sufficient enough to restrict the credit by the central government in this manner. Whether that restriction can result into the complete denial of the credit to me, that is another question. Can a restriction completely take away my right to take the credit? Something to be looked into. The second is the supplier has defaulted in payment of tax and such default is continued for the prescribed period. It can be 2 months, 3 months. He has continued. Then output tax payable by the supplier exceeds. So whatever output tax payable he has shown for a particular period, as against that what he has actually paid is much lesser by the prescribed limit. Then also his invoices may be restricted for the purpose of passing on the ITC. Supplier has availed ITC in excess of ITC, which otherwise would be admissible to him. And supplier has defaulted in discharging the tax liability as per 4912. 4912, which is a part of the current budget, and which we have seen where he cannot utilize the ITC beyond a prescribed limit. If such restriction is in place, and if he has utilized the ITC more than that, then he can, even then case, in that case also central government by notification or by some, can restrict the credit. Overall, for justifiable or unjustifiable reason, but definitely in a very, very unjustifiable manner, the entire ITC mechanism is getting squeezed. The more and more restrictions are being placed. And idea is basically to discipline the people. And idea is basically to bring the evaders, to check the evaders and to bring the evaders in the net. Whether they will fructify, whether they will fulfill the objective, I have my reservations. I have my serious reservations. I have my reservations about the very validity of all these provisions. In the coming days, there is going to be a lot of fireworks on this. Having said that, one thing is also very clear, that time has come for trade industry and we professionals also to introspect, to undertake a lot of serious introspection. We cannot be, and please don't misunderstand me, no offense meant here. As a professional, we cannot be in any manner, directly, indirectly, a party to the nefarious activities of any person, under any circumstances. We owe it to the society. Amongst the trade and industry also, it's a time to isolate these people. In my personal note, which I was asked to mention, how to mitigate, what could be the safeguards which can be for mitigating these fraudulent activities, which I had given to the note, council के लिए. तो one of the things which I had suggested was about PMLA. I had suggested real-time interaction with the IT authority. Ultimately, all these adjustments are the hawala. So PMLA extension, real-time coordination between IT and GST authorities. I'm very serious about the fast-track courts. There has to be separate fast-track courts for trying such fraudulent cases, particularly where the arrest is taken place. Otherwise, arrest is the only thing which they can do. And once the person is arrested, he becomes free bird because he knows that there is no hang to death punishment under GST. That is the worst they can do. Case will continue for another 3-4 decades. So there has to be a fast track court. Another important thing is for the people to really get into the social boycott of such fraudsters. Time has come for us to really undertake the social boycott of the fraudsters or those who actually facilitate such fraudulent activities. Otherwise, things are going to be nasty. Somebody was remarking in the beginning that, the GST, lot of problems and difficulties. If you think that you have seen the worst of the GST in 5 years, friends, you have not seen anything. The real drama will start now. You have not seen anything. What you have seen up till now is nothing. What you are now going to see in coming days. I'm sure you must be having the glimpses of that. Yes, it has started. And we owe it to the soul. We are professionals. We can't look at GST law as simply the opportunity. In my fourth part on this model GST law, I had actually very, strongly commented on this. Because professionals are looking at the proposed GST law only as the gold mine of opportunities. It is only after thanks to portal that it soon turned out to be the gold mine of the opportunities. जो सोने की खान लग रही थी वो भी कोयले की खान लग रही. And then we started creating hue and cry. But the time has come. Validity, legality, or this battle will continue. But because we owe it not to the society, friends, we owe it to the next generation. I strongly believe, and I have put this question openly in almost all the professional groups in which I am a member. Strongly, I have put it, knowingly, unknowingly, has the GST resulted into the lowering the ethical, moral, and professional standard of the taxpayers, tax officers, and tax professionals. This can be the subject matter of research for the coming days for the sociologists, economists, and psychologists. This can be a serious subject matter of research. And I personally have the answer. I'm working on this paper in my own way. I personally have the answers. And I strongly believe that yes, suddenly, but what will be for the next generation? बद्दुआ देना हमें बाद में आने वाले. बद्दुआ देना हमें बाद में आने वाले. घर न बनता ना सही, नींव तो रख दी होती. What type of society, what type of pillars we are going to leave for our next generation? Only to become millionaire overnight. Some serious problem. Otherwise, this will continue. All these things will continue. Battle will continue in this manner. Coming to other amendments, I'll take up now the certain important amendments on this. 16.4, 16 time limit, then 16.4. There, all these amendments, wherever the word September, return filed for the September, or the due date of furnishing annual return, which has been mentioned, or independently return for the September of the next financial year, it has now been made November. What purpose actually it will really serve is anybody's guess. But before that, let me go back to the 1st July amendment. certain important amendment I will only say. 36(4) I have already covered. 75. 75, that explanation which has been introduced last budget has been made effective. That for the purposes of the subsection, the expression self-assessed tax shall include the tax payable in respect of details of outward supplies, but not included in the return furnished under 39. So whatever is declared as a self-assessed tax under GSTR1 becomes the sacrosanct figure. This is the purpose. The cue has been taken from the Kabir Realties case. Okay, once I have declared my liability, I cannot escape from it. A very debatable proposition. There are contra judgments of the High Court also on this. But they have taken the cue from the judgment. It appears whatever you declare, does that mean self-assessed tax liability can never be the subject matter of challenge? The answer is no, in my opinion. Similarly, interest liability, which is there under, which is unpaid, can be, but it does not mean that I cannot challenge the interest liability. LG Infra Karnataka High Court judgment. There is another judgment of the Supreme High Court also. If the interest liability is disputed, it does not become the final. Interest may be automatic. I have my doubt, because section 73 and 74 speaks about the so-called notice even for the interest also. So limitation period interest can be made applicable. Again, dispute prone proposition, but yes, where the specific law, there's a Supreme Court judgment. And there is a, that which says that also. That if there is if a specific law required, like excise law, which requires the issue of so-called notice for interest also, then so-called notice is a must, and limitation period will also apply to the interest demand. So the point is, the amendment, whether recovery proceeding directly, because self-assessed tax immediately brings 79 recovery proceedings. Because if the self-assessed tax is not paid or interest is not paid, right, resort can be taken to 79. Now, 79 can it be? The question here is, in a genuine case where the GSTR1 is filed, but GSTR3B is delayed, can you directly invoke 79? My answer is no. Then, the section 80, another important point to be kept in mind, that section 8I, which provides for the facility of installment for payment of dues, self-assessed tax is excluded from the scope of section 80. So there cannot be installment facility for the self-assessed tax declared. In a very interesting judgment, this has just come, Jude Cement in the end of the 2021, Meghalaya High Court. This was a case where the party had accepted the demand of about liability to the tune of about 45 crore and odd. Only they said that we should be entitled for the adjustment for ITC and whatever we have paid. But they accepted this. High Court, with the consent of both the parties, actually drew down the entire line of action, and they, including directing the authority to give the installment facility of essentially which is the self-assessed tax. Unfortunately, section 80 was never brought to the notice of the High Court by the revenue. So it's a one-off type of judgment. Whether in a given case, High Court in its extraordinary jurisdiction can also go beyond, dilute section 80, read down section 80 and say that installment facility available even for the self-assessed tax. It's a proposition, because legislature never wanted this. Then, whether section 79, unpaid interest in terms of 75(12), recovery of sales, whether wholly or partly or interest payability, therefore recovery for the interest unpaid also can be taken by resorting to 79 with or whatever the due process of law. Then another is latest functionality. I am told that GSTN, I don't get into technicalities, but GSTN has introduced a functionality whereby they automatically compute the interest liability for the delayed payment for the past period, right? And you are expected to pay this. If you don't pay this, I think the further process will not be there. But what if I'm challenging that interest liability? Portal might have worked out in their own manner. Can it be binding on me? Answer obviously can be no. But because portal will again stop everything, then it's a manual file. So you will have to write to the department if there is a dispute regarding the interest liability. Penalty, whether recovery under section 79 permissible in case of non-payment of penalty. Section 7512 does not speak about penalty. It is only self-assessed tax or interest. Obviously, there can't be a penalty when I am filing GSTR1, declaring my self-assessed tax liability. There can't be a penalty. Penalty can follow due to some other circumstances for other reasons. If that penalty is unpaid, 75 will not come into play. It is directly 79 because 79 starts with any amount which has remained due and unpaid, not paid. And any amount is wide enough to cover penalty, fine, and fee, and etc. everything. Then, having said all this, I mean, I'm not going because time is also running out. I will not go into detail. But wherever self-assessed tax in the consequential interest liability or even for penalty, any action, any recovery action is to be taken. Section 73 show cause notice is a must, in my opinion. When you are disputing that liability, it is the right of the taxpayer. And here, before resorting to Section 79 recovery proceedings, by on the strength of 7512, the board circular has laid down certain guideline which is to be followed. This is the board circular. Now, this board circular says that I should be given the, as a taxpayer, given the opportunity to explain. If the explanation is not accepted by the officer, then what? Is it appellable order? Because this is the board instruction. Section does not say so. Board circular is silent. If the justifiable explanation is not accepted by the officer, what remedy the taxpayer has got? Again, one has to see the 37.3 and 39.9 after this amendment in the budget, 37.3 and 39.9 about the rectification of error. I have declared self-assessed tax liability. I later on find that there is an error. Can I not take the shelter under 37.3 and 39.9 and go for the rectification of error? Can the department say, okay, no, self-assessed tax liability is now final? In my opinion, no. Then, whether order is available of the proper officer initiating section 79, any order or decision taken under the CGST Act, section 1071 is available order. Then, adjudicating authority, section 24, the meaning of adjudicating authority also. And finally, if everything fails, then read court is always there. And there are umpteen number of cases on the read court on this aspect, on the recovery. 83, suffice to say, this is one of the most draconian amendments which have been carried out. Till now, under section 83, about the attachment powers, movable, immobile property, it was confined to only 4 sections. 63, 62, 63, 64, 70, 67, 73 or 74. Only 5 provisions under which if the action is during the pendency of the proceeding, the attachment action could be taken by the commissioner to protect the or to safeguard the revenue in a given case where he is of the opinion that it can, he may dispose of the property or it may, in that case. There are a number of judgments of the Gujarat High Court and other high courts where the particularly Kushal Limited, these are the observations, and then these are, sorry. Oh. These are the judgments where high courts have made certain significant observations on the powers exercised under section 83 arbitrarily in an absolutely illegal manner. Instead of taking cue from this, the section 83 powers have now been expanded to cover a host of the provisions, and it starts with when the action is in, proceedings are initiated. You see the amendment where after the initiation of any proceeding under chapter 12, chapter 13, chapter 15, the commissioner may undertake this. One of the, suffice to say, one section is section 70. Section 70 summons, powers of summons, issue summons. Initiation of the proceeding, summons is issued and the literal interpretation of this provision, commissioner can order the attachment of the property merely on the issue of the summons to the party. These are the powers they were taken. Obviously, if this being there are guidelines issued by the board, but then who cares for the guideline? CBSE guideline, 23rd February 2021. We have to just see this. Again, expect a lot of the heart-burning powers and tug of war between the department, because every now and then we are coming across the attachment, illegal attachment, bank account freezing, all that is coming up, and while with this ridiculously excessive powers delegated, the things are going to be only difficult. I will not go into this. I will explain in detail these detention related amendments. These are supposed to be beneficial. So initially you were required to pay 100% penalty in case of detention in transit, suppose, and then tax and interest, or tax and 100% penalty. So now they say, okay, no, you don't pay that. You pay 200%, but 100% is ultimately you end up paying same. And these are the amendments they have taken as a benefit. They can claim it as a beneficial also. Diversity of the justice. Then, coming to now the proposed amendment as per the budget, I'll come straight to the cancellation of registration due to non-filing of returns. This is simple to understand. They have further now strengthened tightened these provisions. Then, powers have been taken. They can prescribe now the period for which, if the default continues, then cancel. Now, I am expecting the current period of 6 months, what will be prescribed could be much lesser than 6 months. I am expecting that. Due date for issue of credit note extended. Again, this has been made effective. This is proposed and will be made effective from the whenever notified. Furnishing details of, we have finally the two-way communication, the grand idea that the credit admissible will be communicated to the recipient will confirm, or if there are any changes, he will communicate the changes, the supplier will accept. All this two-way highway has now become suddenly one-way street with a completely cul-de-sac. So it has been now given complete burial, all these provisions. So many amendments are in the context of this two-way communication being given a go by completely. Communication of details, this is what you take the credit what I communicate to you. This is complete section 38 has been revamped now, completely being proposed to be substituted. And this substitution, as I said, there will be details of outputs and the restriction power have been taken over. Coming to 39, furnishing of returns, the due date and all. And I don't know why they are doing it November. Isn't it now time to synchronize certain due dates in IT and GST at least? Not to speak about Companies Act also. Why we professionals are not really clamoring for that? Wherever practically possible, you are actually extending the date from September return, which is 20 October to 30 November, not 20 December. It is 30 November, whatever may be the grand idea behind. I don't know. I have never understood this. Propose. Now 30 November, fine. My tax audit, September. Return October. If everything is over, tax audit under IT, everything is over, and I later on find in the month of November, as per the proposed extended deadline, I find a certain credit has not been taken by me, substantial. Am I going to again change everything? Will it be practical? unless at the time of tax audit, it is pointed out that this credit has not been taken by you. Why? There can be many other practical issues which can be, I'm not going into that. My simple case is that, isn't it a time to have some sort of a synergy and synchronization between the due dates under GST, IT, and company law, if not other enactments? And last is about a couple of things. Claim of provisional acceptance, because now with the two-way street gone, two-way street provisional acceptance of the credit, original existing provision, was basically in the context of the two-way street communication. So whatever credit I was taking was provisional. Now, since this is gone, this provision has also lost its relevance. So this is proposed to be omitted. After proposed amendment, here again they have brought the substance of section 16(2). The credit of this is proposed. The credit of input tax credit where the supplier has not paid the tax shall be reversed along with applicable interest. This is a suo motu reversal. This is what is required. And then what it says further down, okay, however, later on if this supplier has paid the credit, then the recredit can be taken subject to such condition as may be prescribed. For recredit as may be prescribed. But reversal is automatic, unconditional. Can the section 73 be bypassed? These are the questions we will have to discuss once all these amendments are notified in much detail. Simply consider by making such provision, can you make the reversal, can you enforce the reversal by bypassing section 73, 74 in a given case? My answer will be no. As I said, if my supplier has not paid the tax, ultimately it's a breach of section 16(2)(c as worst case scenario, which will make it credit wrongly availed. So you issue so cause notice under 73. How can the recovery be automatic? Then 41, this is a recredit in case of defaulting supplier. Only consolation is to some extent, because in Mahalakshmi Cotton, as a part of the affidavit, the state government had said that in case the later on the recovery is made from the supplier or seller, then credit will be set off, will be given to the buyer from whom recovery has already been made. And if there are more than one buyers, then proportionate refund will be given without they being insisting upon the refund claim, filing of the refund claim. How many have got is anybody's case? Zero. Yeah, obviously, they would not even try to locate the supplier. There is a question of recovery because that was never an intention. But this is meant, dil ke bailane ke liye ye khayal acha. So therefore, this recredit has come. This recredit provision has come. Another important fallout of this provision is now, because up till now, utilization of ITC in case of section 41, if you very carefully read, it was saying about utilization is ITC for what purpose. The issue had arisen whether the ITC can be utilized for making the pre-deposit while filing the appeal under section 107. In a recent judgment, the Orissa High Court in Jyoti Construction said it cannot be utilized. ITC cannot be utilized for making the pre-deposit. In Dell International case, South Zonal Bench, Bangalore Bench has even gone to the extent of saying that for even the pre-deposit of the earlier excise duty or service tax related ratio, you can utilize the ITC in Dell International. Jyoti Construction, in my personal opinion, is not a very well presented case, because irrespective of this provision, then this provision should have been challenged. If I am being denied the benefit of ITC for any reason, right, and I am going in appeal against the decision, the demand is of ITC. I am not even talking about the tax demand. ITC is the demand in demand. I am going in appeal. I have a balance of ITC in my books of account, genuinely earned, and I cannot be permitted to reverse the ITC for making the pre-deposit. What type of law is this? It is a department case, exactly. Right? Okay, you have taken the ITC wrongly for any reason. So cause notice is issued to me. Demand is confirmed. I am going in appeal. And am I supposed to pay cash to make the pre-deposit? Even though ITC is there. This particular judgment may require a lot of reconsideration, hopefully. But anyway, this is an unintended fallout as I see this, because that restricted provision of for weak purpose you can utilize the ITC is now no longer. Because entire section 41(2) is being revamped. This is an unintended but beneficial fallout. So in future, at least one can be sure that the pre-deposit can be made now with the ITC with no restriction in place, in law. The only restriction was in 41. And these are all halfway. It could never take off. So it was excellent. And it is gone now. Yeah, these are two reasons. 49 and 49. And we already have rule 86 things. Why so amount of again, like that is existing with any and is an retrospective one amendment from 2021. 2008 amendments were provided for those introduced in section 50 subsection 1 that interest will be paid on the case component. May effect from this is the amendment. Section 3. Section Section 50 of Section 3 interest in case of excess of new augmented right in terms of Section 14 and 40 to 43 there is a making getting that now there are two reasons for this. One is gone. The second is because of the interest ability only for the recover I don't know anything but was actually the concern of the but it is not proposed. And this part of the excess undue question can arise when we will come to the which makes or availment of there is no display for the of this. It is covered by certain basis or not by am I is getting said to be extra credit in each I will always tell you that it's an invitational case. It is not. I say only. Now, after the amendment, this argument no longer be available. The amendment actually strengthens already the argument. The interest of section 53 can be come to play only or until so any excess I think even one can say the thing to say, but even for when where the he is doing the test. So obviously there will be a key under 53 cannot rise under this case. I have to go to be supply by underline supply by, but it is cannot rise. I hate this proposition. This is how I had limited in my area. These it's very badly tough proposed. But now we necessary by to why using company's money. I've taken the IT, I can like it. I don't be like how the problem started because of the whole world. Since 71 and 74 states, all utilized. This is the replica of the 14 of celebrities. Was provision for the recovery of celebrated only while they use the word. In this case, physically good belief, but they won't believe. So they said they have no utilized so this cannot be there. Delhi I told we have a very, very dangerous statement laid down. In so many jointing, it cannot be represented. So even wrongly and I had written a number of times in my articles also, in my paper which I today is I said this is going to everybody. The things. So I 73 use of the word has been grammatic. And consider the whole design of the JSP in a very basis. I cannot be asked now here that it has been undelivered. And the and the immediately amended rule. Making clear capable in 2015, they divided into one. Clear to that's what that it is not realized, but it when realized only again supposed to this is a real statement. And Any ITC local activity types, rate of 18% from the day of, and also ITC only available but no less. 8% will come to be so it is notified, it will be and also prospect. Once the 18% will prospect also. Now, what are the implications? Without going in, those who are paying interest rate for on but not utilized, they can be improved after the moment it is identified. Those who are in the IC in the, at 24% on for the past period. That they should not result in the so this the last part is so now there's so now it's not no time the in respect writing like is the birds eye amendments in two sections basically you know I will because is that is the my it is now time for professional and for become difficult, particularly when we are applying for it's time to get the different, but proposals can be done every day. If I can be, but may the solutions are required. This is the idea of the work. So part of the industry part of the actions. We just can't allow these state of affairs to be so moral fiber of the society. Just when this is today, what is no benefits of this state of affairs. But being benefiting and deserve. Today, I consider myself because most of the complexities, most steps, but the long difference between education and I can and we are, yeah, yes, the before that, a ground and our licenses will be